Hello and welcome to Money Markets and More with me, Dominic Frisby. We are back in the graveyard and we are talking about gold today. For the first time in history, it went above £2,000 an ounce last week, and this is a huge landmark in the decline of sterling. Of course, nobody in the UK echelons of power is talking about it. We are, however, because it matters. Who is buying so much gold that the price keeps going up? Why are they buying? There are hugely significant developments taking place in Asia that have the potential to reshape the global financial order. This bull market is not like previous bull markets. It's not being driven by retail buying. What is driving it is far more significant than that. Gold in pounds is now more than 10 times higher than it was when Gordon Brown sold ours in 1999. That is quite something, 10 times higher. What a clown. In other words, the pound has lost over 90% of its purchasing power. In dollars, it's put on over $1,000 in 2 years. This is proper bull market stuff. And I know I've said this a million times, but I really urge you, if you haven't already, to diversify out of sterling, indeed any form of fiat money, and use gold as your savings vehicle, Bitcoin as well. The gold price action is telling us something. And the way this government is going, it's proving even more rudderless than the Tories were, and in record time, sterling could have real problems, and soon. To my knowledge, not one influencer in the Labour Party, over the course of its conference last week, mentioned stewarding the currency, protecting its value, or any of that stuff, nor did the Tories. Just as every government before it has, they will use sterling devaluation to compensate for their deficit spending. The pound is only holding up in the forex markets because the Bank of England hasn't cut rates as aggressively as the Federal Reserve and the ECB have. They've already gone into their rate cutting cycle. That is coming. Perhaps more significantly, no one in the Labour Party is discussing what is happening in Asia. Central banks are buying gold in huge quantities. They are no longer waiting for the price to pull back before making their purchases. Perhaps most significantly of all, they are not reporting all their gold purchases. It's happening on the quiet. And by the way, if you want to buy gold to protect yourselves in these uncertain times, I recommend the Pure Gold Company. I'll put a link in the comments. Pricing is competitive. Quality of service is high. They deliver to the UK, the US, Canada and Europe. Or you can store your gold with them. If you call them, tell them I sent you. Now, de-dollarization is happening in front of our very eyes. And the implications for the West are huge. But despite the geopolitical significance, this issue is nowhere close to the Labour radar. And it goes back to early 22 and the Russian invasion of Ukraine, when the US confiscated Russia's $300 billion. Most of the rest of Asia looked at that and thought, we need to de-dollarize. China, as we know, has been quietly reducing its holdings of US treasuries. It now holds $777 billion in US treasuries, which is about 10% of the US national debt held by foreign entities. This compares to 22% 10 years ago. That is quite the reduction. China has also, as we know, been accumulating vast amounts of gold. An analyst, Jan Neuenhaus, calculates that China's bought 1,600 tons of gold since COVID. I think the number's higher. That's on top of the 370 tons it mines annually, and most of that mining is state-owned. I was having dinner with a Chinese investment banker last night, and I asked him about the Chinese government mentality and de-dollarization. And he said it is a matter of pride. China does not want to be beholden to the US. Global reserve currency status is a goal. And there has never been a global reserve currency that did not start out backed by gold. For now, China continues operating by its doctrine, we must not shine too brightly. But all the while, it is accumulating gold and reducing its dollar dependency. But it is by no means the only country doing this. Saudi Arabia was caught a fortnight ago secretly buying 160 tons of gold in Switzerland. Kudos to Jan Neuenhaus for the scoop. And one thing is for certain, he says, Saudi Arabia owns much more gold than it wants the world to believe. And this is significant because Saudi Arabia was such a key player in establishing the petrodollar in the early 1970s after the US came off the gold standard. And that enabled the dollar to retain its status as the global reserve currency. Saudi Arabia could be quietly repositioning itself as an ally of the next global superpower. It could also, as we shall see, be at the heart of a new global payment system. Now, this new international payment system bypasses the US dollar. Now, if you ask Chancellor Rachel Reeves or Foreign Secretary David Lammy about Mbridge, I guarantee you will meet with a blank look. The same blank look you will almost certainly get from just about every government minister at the mention. But it matters. Mbridge, Multiple Central Bank Digital Currency Bridge, is a new international payment system based on blockchain technology being developed by the Bank of International Settlements Innovation Hub in Hong Kong, the Hong Kong Monetary Authority, the People's Bank of China, the Bank of Thailand, the Central Bank of the United Arab Emirates, and the Saudi Central Bank. And these countries have all been buying gold hand over fist. Even Thailand, which in the last 5 years has become the 7th largest buyer of gold in the world. Thailand. And Mbridge has another 30 observing members beyond those 5 nations. It is designed to facilitate faster, cheaper and more transparent cross-border payments using CBDCs. That's using all its own language, bypassing some of the friction associated with the traditional international banking infrastructure. Settlements take minutes rather than days. Its designers say it's quicker, cheaper, safer, more accessible and more transparent than existing systems. And that it is especially useful between, and I quote, regions that do not share a direct payment corridor. And I'm thinking that's code for the likes of Russia and Iran. It is peer-to-peer, so no US or any other third parties getting in the way with their pesky weaponization of finance. Now, this is important. There is a strong political desire to make this work. So let's summarize. We have a new international payment system that bypasses the US dollar being developed, and the countries that are developing this system, or indeed just watching this system being developed, the observers, they are all buying a lot of gold. It does not take a genius to work out what is going on. More generally, gold is increasing as a percentage of international reserves around the world over. It is replacing US treasuries, which are decreasing. This is the trend. And that is why this bull market is different from previous gold bull markets. It's not retail, it is political. Now, do you know who the largest holder of US treasuries is after Japan and China? You guessed it, the UK. We have 742 billion to Chinese 777 billion, and we're increasing our holdings. On current trends, our holdings will exceed China's sometime next year. We are clueless. Do what the Chinese are doing. Own gold. And if you want to read my report on how to buy gold, I'll put a link in the comments. And once again, let me recommend the Pure Gold Company if you want to buy gold. Prices are competitive, quality of service is high, and they deliver to the UK, the US, Canada and Europe. Or you can store your gold with them. Thank you very much for watching. Please subscribe to the channel. Please share this video with your friends. It is important. And I'll be back with another video very soon. Until then, goodbye.